Tucker because we're not ready yet. Bye. We merged with Palm Swap. So
yeah,
we have
I saw
we
that.
there he is again. Sucker, go away. Yeah, we did, and we have such a huge community that is joining us right now. So
Very good.
I'm going to put out our session there as well. I will start the thing officially now, so people can come in. Hang on, let me start it. Start event, start event. So now it's officially started, so people can come in, and I will do a like a one more round of shilling before we start.
Okay, my
So
friend.
let me go ahead and do this. Um, join our trading session with Andrew from Apex. I always want to say Apex Legends, but it's Apex Trades.
Yeah.
Right now, over at our Discord. Boom.
You got it,
Let's
brother.
see if we
You got it.
can pin this.
Let's hope
We
it's not
can.
just me and you. Otherwise, it will be a very nice one-to-one session, my friend. We
If
have
it's just you and me, I'm gonna crack open a beer.
we have the man, the myth, the legend, Robin, and
Yes,
we have
we have
Kick.
Kick as well. Yeah, Kick is
To
from your community, right?
well, yeah, but historically is from Foxify.
Yeah,
Well, it was MDB, right? And then
he's MDB. Yeah,
yeah,
yeah. All right, let me also go ahead and share it here on our own Discord, and then let's give it a few minutes as always, and then kick
okay.
it off.
I've also I'm streaming this live on YouTube, so I think it's slightly delayed on YouTube, but it from my experience with Discord, it's usually a little bit granulated. So whatever platform you choose to watch it on, it's up to you. Hey, Mouse.
Join Andrew. Hello, everyone. Thanks for popping in. I'll just quickly put out another announcement, and then we'll wait a couple of minutes, and then Andrew can give it a start.
I'm going to minimize this. Actually, we're going to be going over some refinement today.
Yeah, I'm very excited for the fair value gaps because I've heard a lot about them, but I know virtually nothing, and I hear like terms like bearish divergence and I don't know, and they're all connected to fair value gaps and all that. So I'm very excited for this one.
Awesome stuff. Awesome stuff. Okay, you just tell me when you want me
Boom!
to get going.
Yeah, I pinged everyone in our Discord server now. Let's see if I can. Am I able to like? Yeah, let me ping this out. Cool. Right. All right. Let's see. Yeah, the people from PalmSwap, they are primarily on Telegram. So we do have a couple of them that have come to our Discord, but their audience is primarily based on on Telegram.
Okay, that's all good.
So there won't be a whole lot of them joining, I think. But we have 5 in the audience right now.
Okay,
And
people can pop in and go out. I mean, look,
exactly.
The bonus here is that it's it's recorded for if people can't make it, right? Because different times, different locations. Some people can make it, some people can't. Even if not, it's recorded, so they can go on the YouTube and catch it there. So, obviously, are we good to go, by the way? Happy to kick off?
Yeah, I will leave it all to you, my friend.
Yes, sir. So, look, one of the things, so I think it's clear what strategy I like to use, right? And I think, obviously, from you guys, you've seen enough of the way I like to look at super exhaustion and then trying to find its way back to balance. And we're obviously going to be covering some of that again, but one of the things that we probably haven't covered is additional confluence, right? And so when we get into those zones, do we have any confluence that gives us a stronger position in terms of that reversal, right? And so as I, just as a pure kind of starter for 10, we're on the 2-hour time frame right now, right? And so I think the important thing as a trader, what you've got to ask yourself with a lot of these things is, what type of trader are you? Are you a scalper? If you're a scalper, it's pretty useless looking at like 4-hour and 12-hour and daily and weekly, because more often than not, you're not really that bothered about what the higher time frames are doing. But if you're an intraday trader, so you may hold it for 1-2 days maybe, and then even further on as a swing trader where you might hold it for days, even weeks, well, then you are certainly going to be interested in higher levels and more zoomed out candlesticks, because you really want to understand exactly what you are. So that question you should always ask yourself, like, are you bothered about looking at like the daily, for example, on Bitcoin? What's that going to tell you if you're a scalper? Do you know what I mean? Like, you look at the daily there, it's pointless marking out this level as a level of liquidity. Maybe this level, but we're so far from that. You've got to be realistic with your time frames around what you actually want to think about as levels. And so I'm probably going to angle this more around daily. So thinking just about where Bitcoin might move in a day rather than thinking about it in a week or, multiple days in terms of its time frame. So with that concept, just keep that in mind. So we're on the 30-minute right now. I'm going to go to the 2-hour actually, right? And like, as you're looking at that, is Bitcoin, right? Like, what do you think when you see that? I mean, where would you identify key levels just by looking at that chart? I mean, firstly, the things that spring to mind here, right, is this level here, right? So you got to think to yourself, that's pretty well respected zone, right? Look how many times it came down here, had a rejection here, and then some more rejections. Now, by the way, this is a day out, so I need to know. I'm going to be representing whatever we show here as a data point, the whole of today's price action, to see how these zones get respected when we've pre-marked them out, right? And so clearly that's a zone. That's a very easy on the eye. You can clearly see it's been rejected a few times. The other one is obviously, that's the high, isn't it, there? But we're so far away from that. Do I really want to be marking that out as a zone? Probably not. Not at this stage. But what I would say is we have a nice level here, right? In terms of this zone. So that would be a really interesting level. Here, purely because of the liquidity element, right? You can see a number of times we've been rejected from this area. And so we just want to mark that off. We want to identify that as a potential zone for an area of interest, meaning if price comes up to there, we want to see a reaction, and how do we react? And moreover, if that tends to be a session high or a session low in terms of maybe where Asia's at or where London's opened or whatever else, then again, it just adds more confluence. And so that's another zone. And now if we talk, like, obviously you mentioned about fair value gaps and order blocks and things like that, right? Like, the definition of fair value gaps can mean something slightly different to different people. I'm going to give you my version of what a fair value gap is, right? But usually what a fair value gap represents, and there's one here, right? You can see it's a 3-candle formation. And it's became really popularized fairly recently, actually, but probably because of the smart money concepts, or ICT. You know, he kind of coined that that phrase fair value gap, right? And it's if you look at the three candles, start off with this pink candle here, then we have the really large long body candle with a big gap between these two wicks. So you can see here, this wick, that wick there, and that wick there, there's a gap, meaning that either side of that candle, price hasn't filled in that gap. And so we mark that off and call it a fair value gap. Now, I tend to just name them based on the current time frame I'm on. So right now I'm on the 2-hour time frame. So I would connect that wick, and I would just drag that along. Okay, just marking out that, and then what that's kind of what a fair value gap is, or what it represents, is a really strong move in one direction that's usually disproportionate on the order book, meaning, you know, a huge amount of orders have come in that's pushed price down so fast that probably slippage has occurred, and there's probably orders that never got filled, is the kind of idea behind it. And then what the, let's call it the algorithm, for want of a better word, of whatever trading instrument you're on, or whatever broker you're with, or, you know, exchange, it likes to go back and fill in that gap to generate those orders that may have got missed. And that's the kind of thesis behind it, loosely, right? You can kind of debate what that is yourself internally, but for me, you know, it tends to provide an area where expected orders would take place, and therefore, on the thesis that markets always seek liquidity, that would be representative of a area of liquidity. So whenever you see a fair value gap, there's always this idea and mindset that price is probably going to come back to close that gap, right? And so that's the gap, the distance between the two peaks. The thing we have on top of that is the mitigation method. So how does a fair value gap get mitigated? Well, once price enters into the gap, as long as it fills that gap, then it's no longer a fair value gap, because it's being mitigated, right? It means that the orders have taken place in that middle gap zone, and therefore that's now closed. Mitigation can sometimes consist of just a wick, if that's your version, or some people want it to be the full candle. So this candle has to close way above there, but we're going to mark it off, right? And we're going to see how it reacts. You know, we had a fair value gap here, right? You can clearly see the wick between there and there was closed, right? So that gap that was created on that push up with this 2-hour candle has now been filled right down here, and so that would be deleted, because that fair value gap is now effectively filled, and therefore creating that efficiency back within the market. I used to be a big lover of like fair value gaps and stuff like that, but I've got to be honest, I'm always mindful of them. They're always in my purview, just making sure that I kind of have a sense on where they are. But I get concerned with kind of smart money concepts and ICT as like this new type of trap, right? Because it's still a thing, right, where people think that an SMC trader, it's a certain type of way to trade, right, where you're seeking out inefficiencies, which are effectively fair value gaps, trying to close them. But that they can also be a trap. So you can get things called inverse fair value gap, where one fair value gap gets created like to the downside, and then a huge one comes back up and wipes it out to the upside. Now that is effectively a trap for people thinking that price was going to come into the fair value gap, close it, and then retreat back down, right? So hopefully I haven't lost anyone. I'm just kind of giving you a sense and an overview of what a fair value gap is. The other thing is an order block, right? Now, an order block, by its definition, can sometimes mean different things to different people, but I have pretty clear definition, right? For me, an order block is clearly where a large amount of volume comes in, right? So I'm going to just explain this, because these are all good areas to think about. So you can see here, these 1, 2, 3, 4 big red candles came thrashing down, right? The liquidity was here, right? You can see that was the low. That was the previous low. We'd been going higher high, higher low, higher high, higher low. We failed to create a higher high above this. I hope that makes sense. And in fact, what happened was price come thrashing down, therefore creating a new lower low. So market structure's shifted at that point. It means that what was previously a higher high, higher low, higher high, higher low has now failed to create a higher high, and now was broken, creating a lower high, right? And so that's, for me, that's the first confirmation that we've got an order block. We've broken market structure. The second confirmation is it's done it on volume. Now here you can clearly see we have volume here, proportionate to the kind of volume that you're seeing here. And then what we're looking for really is what was the last up candle before that huge move that came into the market. And the last up candle is here. And so this would be defined as an order block, that little tiny zone. You can arbitrarily just say, well, actually, do you know what? I'd like to capture the wicks. You know, some people can take the wicks if they're there, but realistically, what you're typically looking for is the last up candle before the move down. If it's inversed, it's the last down candle before a large move up. So we're going to mark this, right? And this is going to be an order block. And the way these are supposed to be traded is, if you think about it, this is where a lot of cash flow came into it, right? Downside cash flow, pushing price down. So that means there's a lot of people with a lot of sweat in the game at that level. And so as price comes back up to this zone, those people who've shorted are going to want to protect that order, right? Therefore, they will protect it by coming back in with another order. So I have no idea how this is going to react, right? And what we're going to do is we're just going to expand these out. I'm going to call this one, I'll just say 2H order block. And call this another 2H order block. We have a 2H fair value gap, right? So what we're doing here, right, is we're just creating or identifying, let's say, areas of interest on the chart. The reason this is powerful is because when we're using this with what you guys already know that I trade with, it just adds a little bit more, let's say, confluence to what might be perceived as a big order, right, or a reversal around an area that I'm interested in. So we're gonna hit play in a second, and we're gonna run through things as we normally do, right? We're gonna see how Bitcoin has reacted today in relation to these zones. I'm also gonna add a little bit more gravy on my roast dinner, right? Which is to say, I'm going to add this range ruler. Now, don't get too concerned here. All this is going to be is the pivot points for the day, right? Which are really interesting because every single person who puts this pivot point on the chart will have those same levels. And so when you're talking about confluence, there's no arbitrary. We talked about this in the last session, right? But it's really important to know you want something that everyone sees at the same level, right, for greater confluence. So I think it's time to get going, right? We're just going to see how many opportunities Bitcoin has given us today. Number one, with confluence, and number two, using, the strategy that I typically use. So let's dive into the 1 minute. And we're going to add this on, right? Now, because we're expanded here, it's going to look a little bit messy, right? We know that. But the beauty about zooming out before is to at least show us what we're looking at. So just as a quick review before we get going, right? I have my two indicators on the chart, which I pretty much always use. I'm going to zoom back out because it looks like markets have shifted a little bit. Let me just... where are we? Select bar. I'm going to go to here. And then we're going to run it. So, have I got... Yeah, I've got my zones. So these are higher level zones, right? Do I anticipate price is going to come up to these levels? Probably not, right? But they're just areas where I think there'll be a strong reaction from Bitcoin, or there's a high likelihood that price is going to gravitate towards them zones because they're probably the higher levels of liquidity. But today, the daily range, so we're just going to kick off. I'm going to hit play. And let's see what happens. Asia's just opened up, so this is the middle of the night. We're currently hanging around the pivot point, right? So the main central point given to us from the previous day. By the way, fire in any questions if something I'm saying is not understood. Now remember, I don't take a trade in Asia. I'm actually going to make this a little bit bigger so it's easier for you fellas to see. But where are the key points here, by the way? So down here, we have S1. That's the first support level from the pivot. And up here, we have R1, which is the first resistance point on the pivot. They'd be two interesting areas. If we expand that far out at them zones, it's just higher confluence for the move, right? We could also, by the way, just like thinking logically, let's go to the 15-minute really quickly, just so we don't mess around, right? We could think, well, let's, because we kind of done the initial analysis based upon the 2 hour. Because we're doing it daily, maybe the 15-minute would have been better, right? So there's our first order block here, right? That order block, hopefully you guys can get that. Let's look at why that was an order block. Because number one, volume coming to the market. We broke down below this level here, which was the liquidity level. Okay, so this is the liquidity. So we've seen, firstly, volumes come into the market. Secondly, we've broke the liquidity level, i.e. the market structure, and we've took the liquidity. So that's a really good move. So for us, there's a fair weight of confidence that that is a nice order block, right? So this is now, we'll call this a 15-minute order block. Right, 15-minute.
Andrew, just a quick. Can I ask a really quick question there?
Sure, absolutely, yeah.
You said like the order block is the last up candle, right, before the move down.
Yeah.
But there are like two small up candles right after the one that you marked. If you go a bit more to the right, those two, yes, right there. Yeah, the two that you're hovering over.
So here, you're talking here.
Yeah.
You could also argue here, right? That is also an up candle, which is a fair point.
Yeah,
it's a valid point. I mean, my only concern, Frido, though, that would be a very, very tight. We'll put it in, right? Because let's see how it reacts, right? I always want to give myself more of a zone, right? I'm taking that because it was the last peak, right? And it did kind of start the move, right? Like if you was to mark this as market structure, right? You'd say that was the high, and you would say that was the low, right?
Yeah,
you wouldn't say that was the high. So I see this as one move that's broken its structure, right? And you are absolutely correct. This is where the move has started and where the volumes come in. But this is the thing about trading, right? My idea might be slightly different than yours, and different than Kicks, and different than Mouse's, and whatever else. And so it's definitely good to think, hang on a minute, isn't that the right way? But I'm thinking logically more around the move, right? The actual market structure move, which that's the top and that's the bottom. And I see that was the last up candle before that leg down, right? And there was enough volume in that leg to construct or give me the idea that would be a nice zone for me to thinking about, reversing into. But the beauty is we can see how this reacts, right? Because I can't remember. I don't know how Bitcoin got on. But there's a zone here, so I will leave that on. What else have we got? We have a fair value gap here, right? Only a small one, but we definitely have one. Hopefully you guys can see that. That's the gap between them two. I'm going to leave your one on just so we can see where it is. But we've also got some nice confluence because we've got the top of the pivot point here, right? In that fair value gap as well. So that gives us two elements of confluence. We've got the top of the pivot point, which can act as a resistance. And we've also got a fair value gap that price might want to fill, right? But we've also got an order block above here. So the trouble for us is we don't know where the market wants to move towards liquidity. We're just highlighting areas that we think, okay, there's a really good chance here. And what I'm looking for is exhaustion, right? Out of balance. So the reason I'm marking these zones and the whole entirety of this is because I want to know when are we exhausted, and what confluence do we have in that area that'll give us appetite to take the trade. So I'm going to go back into the 1 minute. Just read what Kev said. Usually we only consider an order block if the move leads to a change of character in structure. I also like to see a fair value gap above or below the order block, or at least a vector candle or some. Absolutely right. So, you want, like I say, for me, there's two big things, right? I want to see big volume coming through, which for me, we clearly have volume, and I want to see us take liquidity. And like what Kevin's saying there is, he also wants to see a fair value gap get created when that move breaks the liquidity or breaks that market structure. And so we have, you can see we have a fair value gap there, and we also have a fair value gap here, right? Now we've come and tested. Asia's opens up, and if you think about it logically, Asia's opens up, started the trading session, and it's come into the fair value gap, right? It's come into 50%. So in the vector world speaking, the vector candle, 50% is perceived as closed, basically, that they're happy that markets came and retraced back into that fair value gap. So there's two trains of thought. Fair value gap, big move on the order book, disproportionate imbalance in terms of how the way the order book is kind of driven out. So like if I go and buy 1,000 Bitcoin and there's not much Bitcoin on the balance sheet or the order book, it's going to create a fair value gap because it's going to slip through a lot of those order points, right? So that's effectively what you get. A vector candle is where you get an amount of tick volume that's 300% more than the average 10 candles that precedes it. It's very similar to this. I mean, what these red candles here, these represent a bigger move, right? You can tell there's a lot more volume coming into the market and a lot more tick volume than the last 10 represented candles. And so, to Kevin's point, he's just suggesting what he perceives as a fair value gap, or an order block rather, gets created when we have a big move. We create a fair value gap with that move, which we've done here, and that we take liquidity from that, and market structure shifts. So you could argue, I mean, I don't know how far back we've got to go to be able to perceive it, but price is moving down. It's come back up. We've broken structure, so price is bearish. Then we've come back up, and price is still bearish. So you might argue that would not be a order block. Is that fair, Kev? You'd probably suggest that might not be an order block because we're still bearish in market structure, right? But the problem with that is there wouldn't be an awful lot of order blocks. Yeah, so you suggest that was an order block. And that's what you said as well, Friedo, to be fair. But my thing is, I want to see, I'm looking at the move, right, in terms of the full move. This is definitely where the volume came in. That's undeniable. But this is trading, right? It's purely dependent upon where people are willing to take a trade from. But we'll see. I mean, we'll go through this, right? Let me just add my. I'm going to go to the 1 minute, and we're going to see what zones get tapped. Right now, remember, I'm only taking a trade after Asia has closed. 10 o'clock my time, that is, right? Let me just take a pause. So, nothing for me at this moment in time. Waiting for Asia to close. Okay, so Asia's still opening, but we are starting to see expansion now of the range, right, on the deviations. That's just simply because we're getting a lot more volume comparatively from, you know, this initial move here. So right now, the way I would be trading is I'm on the sidelines, right? I'm not taking any trades yet because I want to see is take the high or the low of Asia. So I'm just going to continue in a play. London comes into play at 8 o'clock UK time, but so does Asia. Asia continues. Yeah, I was waiting for Asia to catch up. Asia continues till 10 a.m. UK time. So this is the London kill zone, right? This is where, you know, we get that hour before the market opens. So two things, right? I need price to come back. I need price to get past here before I will take a trade. But we are coming into another zone that we marked earlier. Okay, so now Asia has closed. Asia, by the way, the range, there's the top of Asia. There's the bottom of Asia. London is just slightly above that. So where I would be willing to take a trade is beyond here, right? Getting into this zone here. And also, you know, above here at that third standard deviation. Or between 2 and 3. Ideally beyond 2 and 3. But let's see. I'm going to hit pause when price gives us something to play with, right? But the reality here is you just got to be patient. And it's not ideal, right? Because sometimes you just want to trade and trade and trade and trade and trade. Sometimes the opportunities just don't come. But I've learned a lot of expensive mistakes. Sometimes it's better to wait on the sidelines than to get into a losing trade. Okay, so we've taken Asia, right? There's Asia's low. Prices finally managed to come down, and we're at that second standard deviation. Now, my issue trading Bitcoin is if you're trading with high leverage, which most of us will be because we don't have the capital to trade, difficulty is you're not going to get the big swing moves that you want that pay for the fees versus the way I'll be trading on like futures, right? Equities, where you're trading with, like, you can see the balance there, right? Account balance 50,468. That $468 I made today on equities just by, you know, trading this system, but in and out, waiting for price to touch here, get a, you know, 5, 6, 7 points, and it's $300-400 or whatever it is. I can't do that with Bitcoin because the fees are so high that the leverage, because I have to trade with leverage, it just absolutely kills me. So the only way I can trade this system is when price does come away from balance, which is the VWAP. I've got to be really confident that I can hold on for the trade for a nice retracement, right? But it's much more difficult to trade this way, I think, when you're trading crypto. But let's get play anyway. You know, first thing you notice there, right, is, and my main rule is that you want to see us take the low. So, not perfect, right? We took the low of Asia. And then, you know, we came into that third standard deviation, right, away from balance. And now where's price going? Heading for this liquidity here, right? If we just expand that. Oh, sorry, that's not the liquidity. My apologies. That was what I done before. But what's above us? So now that would have been a nice trade, because that was the first time we took out the low of Asia, right? We had to be patient, by the way. We had to wait for a long time for us to get all the way to here. But so far, that's turning into what would have been so far the only trade of the day, right? But $800 move, even if you got to it right at the second standard deviation, you wouldn't have took a mass amount to draw down. And already you're looking, you know, not quite nice. Maybe you would have got out at VWAP, right? Because that's a safe thing to do. $586, not a bad move. Where's the next target? It is quite nice, right? Because there's the high of the day. There's Asia's high here. We're also at the pivot point range. And then we're also, this is that second and third standard deviation to the sell side, right? Or the buy side, rather. Let's just hit play. So we've taken So now here's the next move, right? We've taken London's high. So that was the high of London. London finished here at 5 o'clock UK time. What happens here? We take London's high with a lovely little sweep up right into that second standard deviation. I don't know if this is going to be the move, right? But let's say you got in there for your second move, which you'd have to wait patiently for. Price range. If you got in right at that second standard deviation, you know, the 300 point move. I mean, I don't know what leverages have to trade with or what levels, but back in the day when we were trading on Bybit and stuff like that, I seem to remember 300 points was quite a nice move, right? But based on the rules, they're the only 2 trades so far today. Right, let's see what ends up happening. Ideally, you want it to go back to VWAP. So, not bad. That was a... It depends on your risk appetite. But that was just shy of a 400 point move. But then, potentially, another opportunity presents itself. Right here, we have Frido's and Kick's fair value gap, right, which was created on that 2 minute, sorry, how many minutes? Was it 15 minute? So, oh no, my apologies, that was the fair value gap, wasn't it? I got that marked off. Was that the fair value gap? I'll leave it on the 1 minute. What was that one?
The one that we defined was the one above that.
You were above that, weren't you? Yeah. I think
exactly.
I think that was the fair value gap though. From the
it was
15 minute, I think. So, you know, this is just all about trying to build some confluence, right? But you've got this second opportunity that's come in now. Again, came and tagged that second standard deviation and hasn't quite closed that fair value gap. I don't know whether I would have taken that trade, I have to be honest, but it's all about confluence, right? In this area, we have the pivot point, the daily pivot point, right? The daily pivot bottom, daily pivot itself, and then the daily pivot top. So those 3 areas there are classed as like the pivot range, that pivot point range. If I play... Now you're back at VWAP. So let's be honest, right? Even if you would have taken this move, right, to VWAP, and then I had to take a little small amount of drawdown, or maybe you even average back in there. You know, it depends on your risk appetite, like I say. There is still another nice move, right? So let's say you got in at that one and held it to VWAP. 600 points there. And what was this one? Now, the challenge, gents, right, is we've had to wait all day. There's 600 points there and 600. So that's over $1,012, like, range move, right, where you've caught a long and a short, out of balance and then in balance twice, hitting the tick boxes that we need. Number one, we take the liquidity from the previous session. In this initial one, we took the Asian range, right? We took the Asian low. There was Asia's low. That move took it there. We only just tick past that move there. And then the top one is London's high. And we took the range there. I mean, $1,200 move is not to be sniffed at, right? Let's play. I think probably, yeah, that's it for the day. 2 trades, only 2 trades. Satisfied the way in which we trade there. Only those 2 trades on Bitcoin would have given us the right rules, right? So we've taken a high or a low liquidity, you know. And in all honesty, I mean, look, we mapped out these couple of zones here, right? You know, we can leave them on the chart because when price does visit them again, we may see a reaction, right? But that was as simple as it really needs to be, right? There's, I don't think it needs to be that complex. I just think you want to identify the areas on the chart where you expect some sort of interest. They're going to be high levels of liquidity, where you get a big rejection, maybe fair value gaps. I've just found myself personally becoming less interested in them. I've kind of got my mind into this mode of just looking for real exhausted imbalances, right, where we start to see this expansion moving away from the mean, which in our case is the VWAP, right, which is, let's just call it perceived value for the session. And the further we are away into them extremes, the more likely I'm expecting us to come back and get back into balance, because balance by its very nature is usually where the most amount of trades are happening. It's probably where the order book is at its most fullest. And so, where this is not the best, you've got to be mindful is on super trending days, right? Like, this isn't a silver bullet by any stretch of the imagination, but when you're trading long enough, you kind of get a sense on when it's a bit rangy or when the market's really expanding, right? You've got to be mindful of that. But any questions? I invite any questions, anything you'd like me to cover, other than, is there any specific content that you'd like me to cover for you guys? Just wait for Bronson to write a question.
No, yeah, he's typing, and while he's typing, or they are typing, I shouldn't assume gender. While they are typing, does this work on, for instance, ARB as well? Because in Foxify we have Arbitrum as one of the pairs, and I've been a bit hesitant to trade on ARB because it's like only a dollar and like 26 cents at the highest.
I mean, let's take a look, right? So let's
Yeah,
run it through. Let's
cool.
run it. Let's run it through its range. Just for the necessity of clarity, I'm just going to take that off really quickly. Yeah, give me a sec, Brandon. I will do that for you, matey. So, my rules are I'm not really wanting to trade in the Asian session.
Mm-hmm. Following a pretty similar similar pattern, right?
Let's go to the 5 minute, right? Because the candles will move a little bit quicker, I think. And remember, it doesn't matter what time frame you're on. This is the same, right? It's the same bell curve. So I need price to get to here, which is 10 a.m. where my current bar is. So right now I'm just letting the range build. Okay, so there's Asia's low. London opened up here, 8 a.m. I need us to take the liquidity below Asia, and ideally in this zone. Okay, so London has now taken Asia's liquidity, but we haven't come into the zone, right, that I'd be interested in. Just going to bring this out a little bit. No. There was no opportunities for ARB. Right, if I run that same one on... Is it ETH?
Yeah, ETH, yes.
ETH.
Because I know, for instance, that
Well,
ARB is like it's starting to become like the number one favorite going to be traded on our platform right
well,
now.
yeah, you can clearly see, right? So there's Asia's low. Yeah.
Hmm.
Here's the point
Yeah,
at
it
which we
broke it.
touched the second standard deviation, and we got a response to VWAP, right? So
Yeah.
that's the actual move there. You can see. Let me just get rid of that so it's a bit clearer.
Yeah, I actually got this move with Bitcoin today as well.
So that move here, when we touched that second standard deviation, I'm not saying you would have got in at the second. You may have tried to sit on the sidelines and be more patient, wait for it to get into the actual, between 2 and 3. You may have, you may not. It depends on how quick you wanted to move. But that was still would have been a nice move if you would have took the chance. That was the point at which it touched the second standard deviation. And we got on to VWAP. So $67 in ETH. What was the other one?
That's pretty nice.
What was the other? What's the other one that?
BNB.
BNB, right? BNB.
Yeah, BNB is the last one that we facilitate. Wow, BNB was even more crazy.
Wow. So,
Should have been there.
yeah, that would have been a crazy one. So let's see.
Yeah.
Asia finished here, but it didn't make any
Ah,
moves. It
shit.
didn't
Yeah.
didn't make any moves. I mean, look,
Moved too early.
just so you're aware, right? Look, you could argue and say, well, I'm just gonna trade every time we come into the second/third standard deviation. The problem with that is, like, I have this mindset where I think markets are always seeking liquidity, right? Trying to find and seek out where the biggest pools of liquidity are. Whilst fair value gaps, order blocks, whatever are areas of liquidity, there's certainly, I don't think, in the main, the biggest liquidity. It's usually previous day high, previous day low, Asia's high, Asia's low, London high, London low. I think once we've taken one of them, for me, it just magnifies the potential for a reversal. And so, oftentimes you will see that we'll come right into that third standard deviation or the second one here, and then we'll get a move up, right? It's just you have to have some sort of a plan, because if you don't, you'll take every single trade, and it might be 50-50. 50% you'll win on, 50% you'll lose on. I think you need a way to restrain yourself a little bit, and even if that means sitting on the sidelines, so be it. Trading's a long-term game, right? We need to slowly build, rather than just trying to take every single trade that comes your way. Right, let me get to Brondon's question first. So bullet points. Look, so for me personally, if I'm looking at an order block, right, let's go back to BTC. And again, this is how can I say? This is just my take, right? Fact check it. Go online and double check how you want to perceive it. But like, if I'm thinking about an order block, let's try to look for a really exaggerated one, right? So let's go to the 4 hour on Bitcoin. I would say that was one. I would say that was an order block, right? So you see this little small candle here. You see this really, this is a nice sharp move down, right? This is liquidity. You can see the low of this range here. So bullet point number one, do we break structure? So if we're moving up and then we have a move down that breaks the previous structure, number one. Number two, do we create a fair value gap in that move down? So remember what I said about the fair value gap. It's that 3 candle move, right? Where you get that gap in between the candles. That's the second thing. And then number 3, is it done with volume? Nice big volume move, right? That's effectively what I would perceive as an order block. So the order block being here, that's broken down to create the breaker structure. high volume, and a fair value gap. Did that answer your question, Brandon? Thank you. Mouse, risk management. See, when I was trading crypto, I wasn't really great at risk management. I have to be completely honest. And that's simply because I don't like to use stops. I like to be able to try to work myself out of a trade, right? That's not always a good thing, right? But where it really benefits me and puts me in favor is because I trade prop firms. I'm not risking my capital, right? So my risk management is the actual evaluation account. So let me give you an example, right? So these were my trades today. I'm going to go to the 1 minute. So, like, you can see these scalps. You go right the way back. Market opens here, right? 230, I think I took an earlier one. All right, no. Get rid of that second. You can see here, I think I took a small scalp there. That was just a one scalp move. I don't use stop losses, right? So I'm not like, if I lose an account, I lose $30. You know, that's it. But I have $50,000 to trade with. I can drop as low as $2,500 in wooden dollars, right? So simulation money to try to gain $3,000 to pass. This current one I'm trading with is my actual PA, right? You can see account PA Apex. That's actually a funded account now, not a challenge account. So what I've traded with today is just my actual funded account challenge, right? We started on 50k. Today we are $468.30 up, right? I've got to get to, I think, $2,600 and then I can take a payout. So what I do is, like, I've prices come up into the third standard deviation and I've taken a short, and then prices come down here. That was like a $300 move, I think, maybe $250 move. But if you look at that, I'm not like trading with leverage. I'm trading with contracts, right? So one contract is equal to, I think it's $25 move per contract. Maybe Kev, I always get the mistake. Maybe you can tell me what one contract on NQ is. I think one contract is $25 move. Anyway, don't quote me on that. So I only need price to move I only need price to move a very small amount to really make some capital, right? And then what I've done is I've waited. Here's the kicker. I mean, look at that. Prices come all the way from that second standard deviation there, all the way down to this third standard deviation, right? And look at that for a move. I didn't get in on it. I thought to myself, prices skipped all the way down. I felt like price was going to expand and it was going to continue going down. I'd marked some zones here that I thought were going to be useful, but, it never got down to that zone. But again, come into the zone, taking the previous liquidity, and then, price then goes back up. And then I think here I took a small scalp. This was nothing to do with the way I trade my system. It was more to do with the fact that I was just looking at the candles. We'd taken the low and a fancy price was going to continue going on. So again, this is true scalping, right? You're in for 12 seconds maximum, maybe 10 seconds for the trade. And it's a nice number, right? Did I take any more trades? I don't think I have. Yeah, I took a very small scalp here. That was like maybe 2 or 3 points. Wasn't huge. Then of course, again, look, true to scale, right? We come right into the third standard deviation, and look, price is now, worked its way back up here. This incidentally was a fair value gap. Now listen, the question for you, Mouse, was what about risk management? So let's say I've paid $300 for 10 evaluations, right? So out my bank goes $300, but I have 10 evaluations, and so I can trade with stop losses, and I can try and be, do all of the kind of stuff that, you kind of historically taught. Or I can think, well, if I lose an account, I'm going to lose like $30 or whatever the cost was for the evaluation. But I know 15 points, right, which is this distance. That move there is enough to pass an evaluation. So I just have to get... I believe in my ability to be able to pick a point. I mean, let's look at it there. Comes into third standard deviation, depending on when you get in. If I lose an account, I lose an account. It's $30. But if I pass, then all I'm doing is going for like $200 or $300 scalps, right? So I'm not trying to hit the Hail Mary like I do on the evaluation. What I'm actually aiming for is just enough to get me $300 here, $400 there. Very small moves. Like you see in these little blue and red arrows. These blue and red arrows just represent where I got in and where I got out. For me, I trade a lot better when I'm not using stop losses. And the reason I do that is because, for example, if I'm on one contract, right? So let's say I enter a trade here. Let's say I enter a right on this one here, right? And I've gone long. One contract. I'm allowed $2,500 drawdown. Okay. Well, one contract is maybe $25 a point. So, it's about $500. So when I'm down to this point here, I might be $500 in the red, let's just say. But I'm probably gonna average in at this point, right? So I'm probably gonna add another contract as price continues to hit that third standard deviation, and so maybe at this point is my new average, right? So now my long entry is here, which means price now has to only just get up to here for me to get into profit, and I'm 2 contracts deep. So, does that make sense? It's risky. This isn't me advocating that this is the way you should trade, because number one, this isn't my capital, right? I've paid $30 for an evaluation, and I can stomach that loss. Like if I lose, that's all I'm gonna lose, right? The money's already unreal. It's already realized. It's gone out my bank. I can stomach that because I know the type of trader I am. I'm quite risky, right? I take risks. It's just the way I am. And so I would probably... Finding prop firms has been an absolute game changer for me, rather than trading my own capital. I think if I trade my own capital, I'm never going to make money in trading. I haven't got the right mentality or the right temperament for it. But being able to trade with prop firms around specific rules and knowing exactly where to stand with my loss, like, I can stomach that. It just becomes... It takes a lot of the stress off you, if that makes sense. So that's the only way I can describe it, if that makes sense. But, if you want to apply risk management, if you, with funded, right, it's even at 50x leverage, right, you start with $400, right, and so, your liquidation point, what I like about funded is you actually don't get fully liquidated as you would traditionally on like a Bybit or a Mexi or whatever. Pretty much, when you're in the hole, you're in the hole once you get liquidated. So that's something to be positive about, right? But with, like, when I took the funded challenge, I wasn't patient. I didn't even trade my system. But like, if I go back to Bitcoin, now what I don't want you to do here is run away and go, right, that's it. This is how he's taught me to do it, so this is exactly what I'm going to do. But you can see here, you can say to yourself, right, we've come into the zone, right? We've come into an area which we perceive as what? extended, right? Out of balance. That's not to say it won't continue, but you know, we've watched how the market's been trading. You know, hopefully there's no crazy news event, or Michael Saylor hasn't gone and bought a Brazilian Bitcoin or whatever just at the time that you take the trade or whatever. But like, you know, it's always going to be about leverage, isn't it? So let's say you got your funded capital, you got your $400. Let's say you're back at $100 a year or $200 and whatever leverage. You know, it's just how you can kind of think to yourself, well, that's how I'm going to trade. My only thing about leverage is, like, the way I scalp on NQ, you cannot do that on Bitcoin, because the moment you take the trade, you're already in negative equity, right? You're already in, not negative equity, but you are already, whatever the percentage is. Like, I was quite shocked when I first took my first trade. I was like, wow, okay, I'm going to take a trade, but then realized quite quickly at like 50x leverage or whatever the maximum was that like I'm quite out of pocket. And because I applied the way I trade here to Foxify, and it's not just Foxify, it's any market which you apply leverage to, right? So I had to kind of think, wow, okay, if I was going to trade funded again, which I'll definitely do it again, I would be more selective with the way I trade. Number one, I would always go high leverage, right? Because you need the high leverage, otherwise there's no point. But I wouldn't be so quick to get out of the move, and I would be waiting for, you know, we take this that only trade, right? This was a lovely trade to take, by the way. This was a really nice trade. We took the low of Asia, perfect. Came into that second standard deviation, and that just would have been a fantastic move. You know, whether you took it at VWAP or whether you took, you know, you had the balls to hold on. Either way, really good, right? But we also got some nice moves to the downside when we hit the second standard deviation to the top, right? Because we took out London. It's the other element that we need. That we take the high and or low of the session, and then we held it into VWAP. So I think they both would have been quite handsomely paid. But I don't know the math well enough to be able to calculate quite quickly what the return on investment would be for those two trades. I don't know if anyone can help me out with that if they know. But your risk management, I mean, look, you've got to like think, once price starts going against you, you know, once we start, like here, if you do take a trade here, there's every likelihood that price can still continue down into this third standard deviation, right? I mean, you've just got to be willing to cut the trade as a loss and say, do you know what? Am I willing to stomach this for the entirety of where I'll be liquidated, versus responding and getting back to that VWAP? Like, in all honesty, you've got to remember, as price is below VWAP starts to drop as well. So over time, even that return to VWAP might still be below where you needed to go for the higher move. Does that make sense? Because like VWAP's not static, right? It's not just a flat line. It's constantly moving with the market based on the amount of volume and price action. But I just think over time, if you apply the science of waiting for us to take a session high or low, waiting until we're, you know, extended, you're in a pretty good spot. You're in a pretty good spot in terms of like some sort of rules to work to, right? Because two things, you're out of balance, and price likes to seek balance, and you've already taken somewhere which is perceived as liquidity. Just remember, if it's going to be a mad, crazy trending day, don't try and trade the system. But when we're kind of ranging like that, that's pretty much where you want to get to. Did that answer your question? No problem. Momentum oscillators. Yeah, I used to be a huge fan of MFI, which is the money flow index. and there's nothing wrong with that. Actually, it's a really good one for overbought and oversold. But I've just found myself, I have my best success being a price action trader, right? Which is not focusing too much on indicators per se, but more looking at the relationship between volume and the candles, and then on top of that, looking for those expanded zones. So when we are, in a quite expansive area and out of balance. But I used to trade predominantly MFI, right, the money flow index, which is a momentum indicator, was pretty much my Bible. That's pretty much all I used to trade with. But I just found so many inconsistencies because, if I used to notice, like, when the price, or when the MFI would so I used to trade 80-20, right? So if it was above 80, it'd be overbought. If it was below 20, it'd be oversold. But on a really trending market, it can, get up to 90 and remain up there. And so if you're just using that purely to take your trade, to say, right, when it hits above 80, I'm going to short, and when it goes below 20, I'm going to long. In a trending market, that's going to have you that, buried underwater. It's so momentum's great, but just know when to use it. Would be my feeling on it. I just find price action, the more you kind of get your head into price action in terms of like the relationship between volume and price, you get a better feel for the market, I think. Anything else, fellas? I enjoyed today's session, actually. It was a bit deeper today. We kind of went into a bit more stuff, but it was good to kind of just go over the few raw examples live, because I think you really get to see how it happens. And that, not that I expect you to waste 2.5 hours of your life, but I recorded every single trade I took on YouTube on Friday. I passed an evaluation. And I recorded it. I just recorded it pretty much the whole day and cut it into sections just when I took the live trades, kind of waffly a little bit. But if you want to see exactly how I traded the evaluation, and, I kind of explain my mindset, what I was thinking at the time psychologically, some good takeaways. If you want to, it's just on my YouTube. Feel free to head over and check that one out. Like,
Yeah, I enjoyed it a lot as well, Andrew. I like how we went from the pretty entry level stuff to the more like advanced stuff in this session.
yeah,
And
trading's honestly trading's not easy, right? I am not, I am not the greatest trader. I'm really, I'm good at technical analysis. I feel like I'm really good at technical analysis. What I'm not so great at is patience. I have a really challenging time because I get bored too quick and I just want to enter the trade. And the other one is greed, right? Not knowing when to stop. And thinking that price is going to continue. But honestly, just if you can manage your emotions, and I'm not just talking about entry and exit, just like have a fixed position, say, right, I'm getting in here. It's hit all of my tick boxes. We've taken liquidity. We're in that extreme position. I've got enough drawdown to allow me to kind of take a little bit of, if price keeps going against me a little bit, either you're going to add to that order with the confidence that price is eventually going to return back to the VWAP, and just let it roll, right? Just let it roll. You'll find, like, there was 2 trades there, only 2 trades today, but you could have taken absolutely 2 of them with minimal drawdown and probably a really nice return. $600 each trade. I think that's going to be a nice trade if you're trading your system, right? If you're trading on the funded, I think you're definitely going to be in some good profit on those trades. And the more you do it, the more you just get innate with, like, seeing the moves happen and going, I've seen this before. It gets like kind of a repetitive thing, and then there'll be times when you'll take the trade and you'll go, damn, that didn't work out, but you'll still be something around why it didn't work. I mean, look, don't take these trades at half 1 UK time, because that's usually when huge US red tier news comes out. don't ever get caught out with that, because that can really, blast you. Obviously, you've also got the 2:30 US Open, right? That's usually quite a strong day, strong time. I trade it because I'm trading Nasdaq, and that's most volatility, and I only need like a 4 point move, and I'm done for the day. So, but just this is my system, right? It's one I've developed myself. It's quite clear. I know where I am with it, and I understand the importance behind it, right? Because I understand the difference between balance and imbalance. VWAP is balance. That's where people like to trade. People don't like to trade when price starts getting away from VWAP. And so, like I showed you last time, I did explain to you the bell curve, right? Go and watch, right? If you really want this down in detail, go onto my YouTube channel and look up the 1 minute. My 1 minute trading strategy developed over 7 years, or something like that, I've called it. It's a brilliant video. I shouldn't say, but I think it's brilliant because I go into absolute detail, and you can see exactly what I'm looking for. I've got all the settings on there. Go and check it out if you really want to understand it deeply. And I think we'll leave it there, fellas, because I think unless there's any more questions.
I think we're all settled. And once again, Mady, thank you so much for being here. It's a pleasure having you.
Do you know
And
what we
each
could
time
do?
that you're on here, yeah.
What just as a good review, maybe once a week, right? Rather than this
Mm-hmm.
being like, let's go over all the blocks or fair value gaps or whatever. Let's just see the consistency of the system, right? Let's just keep reviewing it day over day. Let's take the week and
Yeah, I
say,
love
right,
that.
where did we go Monday? How many trades could have been taken? How many were winners? How many were losers? Next week, how did that happen? Sorry, next day. So maybe the
Next
sessions
day.
are to
Yeah.
review the daily sessions, right? Monday, Tuesday, Wednesday, Thursday, Friday. See how they got on, and then you'll become more familiar with. Okay, I'm gonna take this next time, and they're like. Always a pleasure, gents.
I love that
Really,
actually.
always a pleasure. Really, really nice. You know me. I love to kind of hear the sound of my own voice, so that's always, always a nice thing. All right, matey. Like, I'm gonna leave you guys in peace. But you know where to find me, right?
We do